Welcome to Carbon Clarity, the podcast for the carbon curious. I'm your host, Kev Cooling. I've been a sustainability practitioner for about 20 years, and I started this podcast to share insights into the world of carbon, climate change and sustainability by speaking to a whole range of people, experts in their field. If you enjoy listening to the podcast, please like it, leave a review and share with anyone else you think might be interested. Okay, that's enough of that. Let's get into the chat. Welcome to Carbon Clarity, the podcast for the carbon curious. I'm your host, Kev Cooling from Hut 22, and I'm absolutely delighted today to be joined by Mark Hingston, who is Managing Director of the Asset Services business for Cushman Wakefield, covering the whole of Europe. Hi, Mark, how are you?
Pleasure to be here. Thanks for inviting me, Kev.
Oh, no, great. No, thank you for coming on. Everyone says it's a pleasure to be here, and I'm just grateful people want to come on and have a chat. So that's all good for me. So you've got a pretty big portfolio to deal with these days, Mark. But what would be great is just to take a step back in time and think about how did you get to where you are now?
Yes, it's a great question. One I often ask myself, to be honest. But so I think when I left school, which people could probably work out my age, when I left school was in 1992, I actually started a service and maintenance apprenticeship. So I was on the tools and I did that for 4 years. I was lucky because I got some great experience across quite a few commercial buildings. So the British Library, as it was being built, was one of those.
Oh, wow.
Was one of those properties. And again, I was lucky because a lot of my clients, the likes of Land Securities, were all kind of blue chip clients that I had the exposure into work in their buildings. So I finished my apprenticeship after 4 years. I specialised in building controls because that was an area that I found particularly interesting, and then gradually kind of worked my way, I guess, through a management chain, through supervisory positions, management positions. Again, I was working with very blue chip clients like Shell, Land Securities, BBC, and then latterly kind of ended up as an infrastructure manager, actually at Network Rail for a number of years, where I was responsible for the London station. So anything that was a Network Rail responsibility, I oversaw, and then eventually moved from them to a company called Nelson Bakewell. Who's one of those kind of, I liken it to the West Ham kind of football training academy, punching well above its weight.
Right.
It was a great place to be. Learned a lot, met some great people, and that was my foray into the world that I currently now in terms of kind of property outside of the pure engineering aspects. And again, I started an internal engineering consultancy, but ended up bringing other parts of the business under my control. And eventually was running the real estate business within them, and then got an opportunity to move from there to a company called Cushman Wakefield, where I currently now am. And that move was predominantly about me moving from a UK-based business to a business that spans many geographies. And for me, that was a really interesting facet, just to see how things are done in different countries and different cultures. So it's been quite a journey, but I've been very fortunate, I think, in the journey that I've had.
Sounds fantastic. And how long have you been at Cushman Wakefield?
9 years this year.
9 years.
Just
wow.
gone.
Okay. Wow. Well done. Happy anniversary.
Thank you.
I'm really interested in the fact that you specialize in building controls, because I think it's an area that still even today is not as well understood as it should be, and maybe not executed as well as it should be in terms of, the way buildings are delivered and stuff. So maybe we can come on to that in a little bit. But given that we're going to talk mostly about buildings today, most of what you do, I guess, is about buildings. I guess there's some other bits and pieces around the outsides of buildings and things, but mostly buildings. It might be worth, just for the benefit of those listening, dear listener, to give a bit of context in terms of how big an issue buildings are, in the broad sweep of greenhouse gas emissions and all that kind of stuff. So I was just looking back actually at the UK GBC Net Zero Whole Life Carbon Roadmap, which was published in 2021, but it's absolutely still relevant. In there, they've worked out that the built environment is responsible for like 25% of total greenhouse gas emissions in the UK, which is a huge amount. I mean, that covers everything, right? I mean, domestic properties, commercial, industrial, everything. But if you also add into that all of the surface transport that they're indirectly responsible for, it goes up to 42%. Which is massive.
That's huge.
Yeah, it's absolutely huge. So in terms of an issue, in terms of something that, in terms of its importance in getting us to where we need to get to in terms of net zero by 2050, it plays a really significant part. And of course, not only is it kind of from a pure kind of numbers point of view important. For us as people, it's important because we spend most of our time in buildings, right? I mean, there was a study once that said like 90% of your time. I don't know if that's right or not. I think there's a bit of debate about whether that's the right number, but whatever it is, it's a lot. So I think we can agree that the size of the issue is really significant. But we're talking about this today. When you started back in the day, whenever that was, I guess this wasn't as much of an issue, right? So how have you seen things change in this space since from when you started to where we are now?
Yeah, so I mean, as you've said, buildings are a fundamental part of our society. We live in them, we shop in them, we work in them, we conduct our sport and leisure time in them. They are just kind of an integral part of the way we behave as society. And I don't see that changing. And yes, there may be some changes in the way we use buildings, but I think they will inherently be part of the way we live our lives. I think for me, there's two ways in which the role of sustainability, ESG, has changed over time. I guess going back to when I started, it was all about health and safety. So we'd had the Health and Safety at Work Act come in 1974, and then really it wasn't until the 80s that health and safety really started embedding itself in kind of day-to-day delivery. And I still remember talking to a guy that bought my shed once, and he was a steel erector. In fact, on Canary Wharf was the first building on Canary Wharf going up. And he was showing me these pictures of, just him standing on top of this beam up at whatever height it was. And, you just wouldn't have it nowadays. But it takes time to embed things. And I think that, to me, is very much part of where we're at in this cycle. Although I think this is accelerated, I think it's very much about starting at the very beginning and seeing how it embeds itself into the way we buy, the way we maintain, the way we exchange, the way we occupy buildings. All of those things all have an effect. So I think that's the first thing that I've noticed. It's starting to become a lot more embedded in every aspect, or anyone that's got anything to do with buildings. You can't now ignore the reality of the sustainability element.
It's interesting. Interesting. Yeah. Sorry, Chris. It's quite interesting. I like the health and safety analogy. I mean, I use that quite a lot when I'm talking about how you kind of get sustainability embedded into an organization, right? Because it is like that, like exactly as you say. But I suppose the only difference really between the two, from a practical point of view, is that when something goes wrong with health and safety, you feel it immediately. It's a problem. Someone gets injured, or heaven forbid somebody dies or whatever. It's a very immediate kind of feedback loop there. When something goes wrong with sustainability, it's a very long game, right? Yeah, and you don't feel that pain straight away. Although maybe there are ways, and we'll discuss it later, maybe there are ways in which people are starting to feel that pain a little bit more now. Not come in a physical way, but maybe in a financial way or something. Sorry, I wanted to come back on the health and safety analogy. Carry on.
I think it's to do with the driver. So I think that, like all good analogies, they only stretch so far. So I think I think the legislative aspect is very comparable, but I think the biggest difference now is that we see the market driver in terms of sustainability. So what corporations, what brands, what individuals actually want matters, because they are also driving the market. I don't think you'd have had necessarily, yes, of course, everyone should go home at the end of their working day safe and secure. But I don't think I think the lens in which you view it in terms of sustainability is very different. A lot more, I think people are a lot more educated, a lot more aware nowadays of their surroundings, able to access information that maybe they weren't back in the 80s. So for me, I think the biggest difference is that market force, that market driver, rather than the legislative one.
Right. Yeah, that is interesting, isn't it? I suppose health and safety is kind of a given now, isn't it? I suppose, it's a thing you say, yes, I've got the procedures, I've got the policy, we do the training, we do the reviews, whatever it might be. Whereas sustainability remains, because it's so broad, perhaps a bit more amorphous, and it's kind of a bit more difficult to pin down. Although, there are frameworks and stuff around, I suppose, which help us there. So given that's changing, and given you're saying there's these market forces, what are the kind of big trends? What are you seeing across kind of, portfolio or individual building owners or asset managers, whatever? What's happening? What's the big trends that you're seeing?
So I think the first thing, I'm probably not going to start where you think I am. So I think the first thing actually is around strategy. So I think what we've observed over the last probably 24 months is that there's a disconnect between maybe what a corporate strategy looks like, or a corporate aspiration around sustainability, And then an investor or an asset manager or a fund then needs to translate that and what it means to them in terms of holding real estate assets. And quite often there's a gap between those two things. They don't know how to operationalize the requirements of the corporate strategy into the kind of the day-to-day real estate asset. So I think the first thing for me would be, certainly over the last 24 months, clients are very much focused on trying to understand what it is they need to do to impact their assets to meet their overall corporate strategy. So that sounds quite simple, but actually it's quite time consuming.
Yeah, well, no, yeah, not only time consuming and complex, right? I mean, if you, it's, I think what I'm seeing when I speak to clients in quite a number of cases is they've, a few years ago, whenever it was, they've recognized that we've got this problem. They recognize there's a climate emergency. They've said, okay, we need to step up and do something about it. Let's set ourselves a target. They've set a target. They've probably not done a great deal in the sort of next 2 years or whatever. And they've suddenly realized, oh, wait a minute, we've only got 5 years until that target bites.
Yeah.
What does it mean? What does it actually mean? What have we got to do? And that seems to, that you're saying that's kind of the position that people are finding themselves in. Okay, we made this commitment, got this target. What do you do about it?
Absolutely. Yeah. So I think that would be the first one. I think the next one is more around kind of the integrated reporting. So things around GRESB and various other things, there's obviously been a big uptake in that, and the role that we play in providing fund management teams information to make sure they can report accurately up through to GRESB. And I think the third one is now this kind of increased focus on embodied carbon. So I think going through this kind of transition, there's been a huge focus on, I think, energy reduction, predominantly because there's a cost factor associated to it. So, the cost of utilities has gone up quite a lot
yes
over the past years. So it becomes a material factor in the operation of a building. It's a material factor in the attraction and retention of an occupier in terms of what the service charge is, what they're going to pay, what the landlord has to contribute. All these things now is very much a cost driven factor. But I think again, kind of talking about, I suppose, the maturity of the life cycle of sustainability, I think we've gone a bit further than that now, and I think now we're looking at things more like embodied carbon. So even in my world, I'm not in construction as such, but that's becoming a lot more prominent in terms of making sure we are planning CapEx works properly with clients and making sure that consultants are looking more at deep retrofits, refurbs, and things to do with the building. Again, for other factors we'll probably cover off a bit later. But I think those things around embodied carbon is probably the third area that I think is probably gaining traction now over probably the last 6 months.
That is really interesting. So when I got back into the construction side of buildings, which was in 2019, 2020, whatever it was, we very rarely, in fact, did an embodied carbon assessment of the buildings we were designing. Over the following 2 years to 3 years or something, almost every building has got a whole life carbon assessment of some description in there. And it's really moved on a lot in terms of as a practice. I mean, I say it's moved on as a practice. There's definitely a range of levels of detail and quality of those assessments for sure. But an area where it's definitely not been so strong is in kind of the fit out, refurbishment kind of area. And Overbury did some research a while ago, didn't they? And that was looking at the impact of fit outs and things. So you're seeing people asking for whole of carbon assessments of what, refurbishment stuff or retrofit stuff?
Okay. Where I sit in my office, I'm fortunate enough maybe to be sitting with our project and development services team. So I overhear quite a few conversations, and certainly quite a lot of them are around embodied carbon.
Do you know what I think is really interesting? I got into sustainability 20 years ago now, and it's really interesting that you've seen this change in the last sort of 24 months, particularly in terms of people trying to operationalize their strategies, and in the last 6 months. So it feels like it's taken a long time to get there, to be fair. So maybe I've not been doing a great job. So we can skim over that. Perhaps I'll edit that out. But it does seem to be really accelerating, doesn't it? And you talked about GRESB, so that's the Global Real Estate Sustainability Benchmark, isn't it?
That's it.
So is that, of those various kind of reporting frameworks, is that the one that you're seeing kind of from a portfolio management, asset management? That's the one, is it, that people are really going to? It's been around for a little while now, hasn't it? So I guess it's pretty well established.
Yeah.
And what sort of data do you provide then for that?
All sorts of, but it's all very operational. data, so it's then aggregated up, but everything from like meter readings, I guess,
Yeah.
from kind of waste consumption in particular,
Oh,
around
right.
the
Okay. Yep.
occupation of the building and how it's used. So it's quite interesting when you then piece all that together to look at the overall building's performance.
Yeah, it was good that I must admit I've not really worked with GRES particularly myself, but it's great that it's kind of broader than just energy, because obviously, our impacts are much broader than just energy. But then maybe that the energy part of it kind of comes back to the original conversation about building controls, doesn't it? And thinking about
Yes,
how good are your systems to,
absolutely.
gather that data in a kind of meaningful, robust way.
I've
And
always been a big advocate of, it's about how you operate a building that counts. So yes,
okay, yeah,
this whole thing around EPC. So you design a building with certain parameters and metrics, but is that building going to be working to that 10 years down the line? I could
yeah,
probably guarantee it's not. So it's,
yeah.
how do you make sure, how do you give the building that continuity so that it can operate to those parameters, and that
Mm,
the people like myself, as was the controls engineer, are looking at the right things like the control loops and the set point adjustments and everything
yeah,
else to make sure the building's operating in the parameters that it should do, because they're the quick wins. And you're right, I see a kind of not a gap in the market, but maybe it's a skill set depletion over time,
mm,
that
mm.
that means that these buildings, like a bit like cars, as they've become a bit more complicated, they're harder to maintain and to look after. And you have to have a specialist now for kind of almost absolutely everything. And I think maybe that's some of the challenge we've got as an industry, is to make sure that we've got the right skill sets and capabilities so we can maintain these buildings correctly, and we can, almost do that kind of continual commissioning, as it would be called, to make sure that the building's kind of working to spec every day, and not every kind of 5 or 10 years.
Yeah, thinking about GRESB, and that kind of does that kind of looking back and reporting at what's
Mm.
happened. But more and more in the construction buildings, particularly in London, and I don't know about elsewhere, probably not so much in Europe, I would imagine, but we now see an awful lot of neighbours assessments.
Yeah.
So
Mhm.
NABERS, not neighbours as in the guy next door. And that uses quite a bit of fairly advanced modeling to try and predict what the building is going to look like. But what's really important about neighbours is that it doesn't stop at the point at which the building goes into operation. You've got to
No.
monitor it and report it. Are you seeing kind of demand? Some of those buildings are now coming online, those neighbours buildings. I don't know if you've got any experience with those and kind of providing data to kind of validate the building post once
We
it's in
certainly
operation.
do, and my team
Mm,
certainly have done some of that. And again, I certainly will wear some of our clients
yeah.
hold those requirements for us. I'm not as familiar with that myself, but yeah, for sure, it's
it's
becoming
it's
more
a
popular.
it's a relatively new, I suppose,
It
but
is.
nonetheless, it is another one of those things that kind of just adds to the layers of things that people are kind of requiring and demanding. So, given all these drivers, then, given GRESB and stuff, is kind of data the main thing that your clients are asking for, or are they asking for other things from you in terms of, I don't know, the way those? Well, you've already mentioned embodied carbon on retrofits and stuff. So, what sort of things are clients asking for? Portfolio managers. Actually, before we do that, let's just take a step back. Who are your primary kind of clients? Are they kind of fund managers? Who are they?
Yeah, so they're institutional investors.
Yeah.
They might be pension funds, they might be private investors, but yeah, what we'd call institutional investors typically.
Okay. Okay. So they're managing portfolios of buildings, right?
Yes.
At
Yeah.
any time. Okay. So given that, then what are they asking you for?
So aside from the things we've already spoken about, yes, you're absolutely
Hmm.
right. Data. I mean, all roads lead to data at the moment, because
Yeah.
I think data is the only way you can demonstrate the performance of your building. So
Hmm.
I think the key things that clients are asking for, on top of things like decarbonisation, are around energy and emissions performance. Again, I think we're seeing that now being a value driver. So, reporting what your energy consumption is all very interesting, and you can show a trend, but actually there's now a link between a better performing building and the value of the asset. So that's what makes it interesting to our clients, right? And I think as well, things like net zero carbon and asset planning is becoming a lot more embedded in the day-to-day, the property management world that I work in. So we've always, I guess, had a responsibility to do kind of 5 year kind of capex plans, probably 5-10
Yeah.
years. But the integration more now of net zero carbon, and how you overlay one with the other, and choosing the correct time to do your replacement strategies, that's becoming more and more
Hmm.
important. Again, all of that has operating cost implications to a building, but they've also got value implications. And that's where it then becomes interesting, because clients that are invested in buildings that need some kind of return out of it have got to kind of plan some way ahead. They need to understand the likely tenant movements and occupant movements within the building around what's recoverable, what's not, and at what point is right for a client to invest in that property for its future life. All becomes a lot more complicated, but actually it's embedding that in the day-to-day management makes things easier in some ways.
Yeah, I mean that whole kind of performance value equation is really interesting, that is coming to the fore now, because there was always, I mean, for years there's been speculation of, I mean, even to the level of, if your building's got a BREEAM excellent rating, you can ask for a few more quid per square foot for it or whatever. Maybe that's true, maybe it's not, I don't know. But there's a much more tangible and kind of much more easy to evidence link now, is there, between kind of the performance of the building and in terms of performance, are we talking particularly around energy consumption and carbon emissions there?
Yes, yeah, absolutely.
Yeah, okay, and the value.
Because going back to my point around, I think, occupiers are quite clear and able to articulate what it is they want and what standards they're setting. So this is the market driver. They're looking for certain products at a certain level, and that's what they're willing to pay the premium for, because that fits with their corporate strategy.
Yeah, exactly. And I do wonder whether, and I was going to come on to in a minute, this notion of stranded assets and stuff. We'll come on to that in just a sec. But do you think then that portfolio managers are making active decisions, and I guess they probably are, where they're looking at buildings, particular buildings, and saying, actually, you know what, that is not worth investing in. I'm going to get rid of it, and I'm going to it's somebody else's problem. So that is happening, and presumably
absolutely
that problem is just going to be passed on down the line.
Okay. And depending on the type of fund and the type of risk it's willing to take will depend whether a particular investor is happy to take that risk on and deliver the work and the product at the back end of it, or actually whether they want to divest it and another investor takes it. So yes, absolutely, they're making those decisions.
For such a long time in the world of sustainability, it was really hard to kind of articulate, as you say, the kind of value of the work that you're doing, and certainly very difficult to quantify in terms of a kind of a value proposition. But now we can see that, and we can see it being translated into pounds, shillings and pence. It really focuses the mind of people, doesn't it? And that's fascinating that it's happening that way. So coming on then to that notion of stranded assets and things, and correct me if I'm wrong, but the definition of that is an asset which in the future nobody's going to want to lease or rent because its performance is below a given standard.
Correct.
Yeah. So I know a lot of organizations are looking to CREM now, which is the Carbon Risk Real Estate Monitor, which describes sort of decarbonisation pathways for different buildings, and they've got a tool that allows you to do that, and that will tell you when your building will, in theory at least, become stranded. Is that something you're seeing being used to kind of leverage action on those buildings?
Yes, absolutely. Yeah, I mean, for a lot of our, for the part of the business I work in, I guess it's probably a little less strategic. So an asset manager would absolutely be looking to use and enhance those tools to make their kind of decisions around where they deploy capital. Sure, some of my colleagues in other departments definitely do that kind of work for them. So that's absolutely increasing. Yes, for sure. There's definitely a concern around, I guess, the building stock in the pick the UK. The building stock in the UK is of a certain age, where it does need quite a lot of work, unless you've got an office that's already been refurbished, or a shopping centre that's been refurbished, or the like. So I think there's a fair amount of work ahead, but I think maybe with the policy changes or the direction of travel from the US is always an interesting one, which we've not touched on yet. But I think, for me, it's a bit like when I was younger, I used to frequent nightclubs occasionally. And, when you come out of a nightclub and your kind of ears are ringing a bit because it's been so loud in there. And I think sometimes US policy creates because it has such a big impact globally. It kind of drowns everything else out, and it's not till that subsides that you can then hear actually what's going on more locally. And I kind of feel that with sustainability. I don't think Europe suddenly changed. I think we've always had a vision of where we want to be, and maybe timelines have changed a little bit. But I think the commitment from the EU and from the UK, if we're going to exclude it from a political sense, it has always been quite clear, and we're driving towards that. So I do feel it's a road that we're on, and everybody's on it and wants to be on it. Yes, there's questions around how you get there and how much it's going to cost the economy, and the short-term benefits versus the longer-term benefits. But I kind of feel we've got a good balance for that, and I think stranded assets falls in that very deliberate category of how you would take an asset that you could see in the future may not be fit for purpose, and what you need to do to it to get it to that place, because you can't suddenly leave it. Someone's got to own it. It needs to have a purpose, and that's where, you know, kind of the refurbishment or even repositioning, doing something else with it, comes into effect. So I think the tools in the toolbox have got better. I think there's more scope to do things with buildings now that maybe wouldn't have been considered previously. And
okay, what sort of things do you mean?
I just think we're less rigid about our thinking. So I think I just feel we've become more adaptable, I suppose, in the way we view buildings and what we could do with them in terms of their potential, rather than thinking an office is always an office, or a retail park is always a retail park. You know, it's about understanding the kind of the social demographics around the building, the community around it, as much as it is about the investment into it. So I guess we've just become more mature in the way we view ownership of property, and their place in the community, which I think is quite exciting, because with that kind of broader view, it means that we can do a whole lot more with property and buildings than maybe we would have considered before. I feel historically it's always been a bit more of a copy and paste attitude. Here's something. It's you know, it's this asset class. It always will be. Well, it doesn't need to be like that nowadays. Actually, things need to change and adapt as society changes. So I think it's quite an exciting time.
Yeah, I mean, I think you're right. I mean, being involved in some of the developments that I mean, I don't do as many kind of construction projects now as I did, but they are much more kind of, you know, to use an overused word, holistic in their thinking about, you know, what it's going to do. It's not just stick a building here because, you know, the appraisal says that'll work. You know, there's much more thought goes into it. You mentioned the policy question. I was going to ask you about the US and whether we thought that had any kind of chilling effect on activity over here. But I remember when I got into sustainability, the government were absolutely driving the agenda, definitely driving the agenda. You know, as an example, the higher education sector, their part of their funding was dependent on them having a carbon management plan. And that was back in like 2010 or something. So really fairly early. But over the kind of period between 2010 and 2020, over that period, it kind of flipped, and the market was very much ahead of policy. You know, so now, I mean, you know, you tell me what you think, but it feels to me like the market is very much leading policy. So irrespective of what the policy says, there are plenty of institutional investors and stuff who say, well, we're not going to wait for policy because we haven't got time to wait for policy. You know, we need to do something more than that. And of course, let's not forget that once we get policy, regulation, all that stuff, that is the minimum allowable standard.
Exactly.
Right? So people generally want to perform above that. I don't know if that's your feeling.
Yeah, absolutely. So I think the interesting thing is with any legislation, it becomes the catalyst for change. So for me, the legislative driver was the catalyst to make the change. And as you say, right, you know, as far back as 2010, you were seeing the impacts of that. You know, we're in 2025 now. So, you know, what we have seen is that market dynamic shift, because it's now about what the market wants. And you're right, policy often sets a kind of the minimum bar. It's kind of the lowest expected, but the market wants more. And, you know, in terms of buildings, institutional investors want more because their occupiers want more, and because ultimately it means better value for their building and longevity for the, you know, the return on investment they've got. So, you know, it's all interconnected, but definitely it's now kind of driven from the market force rather than the legislative one. I mean, it's great in terms of governance. A lot of the stuff, I guess, that's coming in across Europe, I guess, you know, combating greenwashing and various other things is all very positive from a corporate reporting perspective, but they're not kind of driving actual change. I don't think. I think it's just now about making sure everyone's at a level playing field, but it's definitely the market, the occupants, the brands that are driving the change now.
Yeah, totally agree. And presumably, you mentioned net zero earlier, and presumably that's because they've made some kind of public commitment to do that. either made net zero carbon commitment, or they're kind of signed up to Race to Zero, or their carbon disclosure project, or whatever it might be, and you're supporting them with that stuff. You mentioned decarbonisation as well earlier. Do you get involved in, and probably it's just what you talked about, the opera, what was that word that you used?
I can't say it now.
Anyway, getting it into action, getting
That's
the
it.
strategy into action. So, how much do you get involved in that and developing and implementing those plans to kind of decarbonize building? But I mean, the big one probably is degassing buildings, right? Getting rid of
Yeah.
gas and doing that stuff. How much do you guys get involved in that?
Yes,
And
we
you seeing
work.
that accelerate?
Yeah, we would work very closely with our internal consultancy teams that
Yeah.
kind of deliver that work. But I guess, the people with the actual building knowledge and access to the building information, the O&Ms and the performance metrics, we hold all of that. And going back to your point about data, it's about making sure that you can use the data available so that you get a much more honed output to that, and something that's realistic to the asset, as opposed to something, I guess, again, going back to EPCs or anything like that, where if you put minimal inputs into it, yes, you'll get an output, but how realistic it will be for the future
Yeah.
is probably questionable. So I think it goes back to making sure that we work very closely with kind of the specialist disciplines that have that kind of specialist knowledge and capability, to make sure we can give them the right information quickly and expediently, so we can kind of finish that and get the client the reports they need, so it's clear around what needs to be included in terms of investment.
And do you see? I mean, you may not be close enough to it to know this, but you mentioned kind of skills shortage or skills gaps and things. Do you think there is enough in the kind of construction, in the engineering sector? Is there enough understanding, experience, and expertise about how to decarbonize a building in a kind of realistic and pragmatic way? Because anybody can write on there, get rid of your boilers, and change your lights to LEDs. Anybody can do that. But realistically, how that actually works, are you kind of seeing any gaps or any shortages of skills?
I think there's a general skill shortage in the engineering industry as a whole, whether
Right,
that's
right.
whether that's on the kind of the service and maintenance side, or whether that's on the kind of engineering consultancy discipline side. So yes, I would say there's a skills gap, and yes, absolutely. I guess I've been fortunate that I've both run buildings as an engineer. I know how they work inside and out, and I've been on the other side of the fence as a consultant as well. So I kind of see it from both angles, but not everyone's been fortunate to have that experience, and I do definitely see a gap. Yes, of course, you can, as you say, lay something out that's quite theoretical, but if you don't actually understand the operation of the building, I guess that's down to making sure you're recruiting the right people and you've got the right blend of experience in the teams that are providing that service. But generally, yes, I would say there is a skills gap.
Yeah, I think, I would agree with that. Just kind of seeing kind of recruitment into the consulting engineering field, it's a very, very difficult kind of area at the minute. I mean, this is kind of a left field question, I suppose, really, and not one you may feel you want to answer, and that's fine. What do you think we should do about the skills gap? Is it more kind of, I don't know, vocational apprenticeships, more kind of degree apprenticeships? I mean, is that the answer? What do you reckon?
I suppose I am slightly biased towards apprenticeships, having been.
Well, me
having
too. I
been
did
an
apprenticeship as well.
apprentice.
Yeah.
Yeah, right.
Yeah.
So for me, yes, absolutely. It's about catching potential people earlier on in
Yeah.
the employment life cycle,
Yeah.
making engineering more attractive. Yeah, I think it's both of those things for sure, and I think apprenticeships are a great way to obviously learn on the job. I think they're a fantastic tool. I've had my own children. I've got two that have been through tertiary education, one that's just in his last year, and it's very difficult to find a job out there.
Yeah.
Even with unless you're going to do something like an engineer, you've done engineering to be an engineer, then actually coming out with a qualification, no matter how good it is still very difficult to find a job out there. So I think for me, we need to be a lot more focused around trades and around apprenticeships, learning on the job, learning how things actually work. And yes, you can cover off the theory and the classroom stuff, but for me, my passion is all about doing it on the job and learning on the go from people that have got the experience and insight to impart to you.
Yep, I couldn't agree more. Okay, here's a completely different question. It's in the kind of vicinity of, well, not in the vicinity, it's squarely kind of bit of sustainability around climate change. But I was going to ask you, are you seeing concern about climate change adaptation, driving any activity? So, people doing climate change risk assessments, thinking about kind of flooding maybe, or storm damage, or what, any of that stuff. Are you seeing that have any sort of impact?
I suppose from my perspective, it's not necessarily something we're actively involved in, but again, our consultancy teams often are. So I think from an investor's perspective, it absolutely forms part of the underwriting case now. Yeah, it will be intrinsically linked as part of that underwriting case. I wouldn't like to say what kind of weighting it has, but it's definitely a factor in the case, and certainly spoken to numerous clients, so even in the last 12 months, around where that sits and what would be useful for them to see. So I think that's we have to take it that is kind of future, and how decisions are made based on those factors. I don't know, but obviously there's a weighting to it, and there's an output to that would suggest, I guess, like all these things. I bought a house 2 years ago, and there was a risk assessment with that came into it that I had to read and digest. And
was that okay?
Yeah. Did it worry me? Not particularly. There were things that I found quite interesting in it, but I think it's just, from an investor's perspective, if you're holding assets for a period of time, then you need to appreciate how change and over time can impact the value of that asset, and external environmental factors are one of those things that impact it, along with things like insurance and premiums and everything else. All of that now is that kind of risk factors are now priced in, I believe, into those assets. So it's become a lot more integrated, but probably quite quietly, I would say.
It's interesting because, all those portfolios in major cities around the globe, in cities which are located on rivers, on estuaries, right at the coast, and it's like, that feels like it's potentially in some cases kind of a tricky place to be. Okay, thinking about kind of a global stuff, then thinking, well, Europe specifically, do you see, and whether we want to make a distinction or not, I'm not sure really, but do you see any significant difference between what's happening in the UK versus what's happening in mainland Europe?
I think only from a legislative driver. So I think the UK was probably just a bit first out the blocks. TCFD, we've got the CSRD coming down the track for Europe. But I don't see much difference other than the fact that we were slightly earlier adopters on climate risk and the requirements. So I think the risk profiles, whether there's a slightly different rubric or matrix that's used for different countries, I don't know the ins and outs of it. But I think as a premise, there's not anything that's wholly different. I think it's just time.
Okay. Right. Okay. Yeah. And thinking about, you mentioned TCFDs there, and is it CRFDs as well? Is that right? Climate related financial
CSRD,
disclosures?
Yeah.
CSRD. Okay. The Task Force on Climate Related Financial Disclosures, a snappy title. I know they're gone now, and they kind of disbanded, weren't they, back in 2023?
Yeah.
It's now kind of I made a note of it here actually because I didn't know what it stood for, but International Financial Reporting Standards. I knew it was IFRS, but I didn't know what it stood for. So they kind of translated those requirements. I suppose that's all part of the stuff you provide for reporting, right?
Correct. Yeah. So we provide a lot of the data and information that underpins their aggregated reporting. Yeah.
Yeah.
Which is why data is so important, because again, there's a strict requirement on what institutions and investors need to provide in terms of reporting. So there's a huge reliance on making sure that the quality of the data that we provide is accurate.
Yeah, I mean, in and of itself, of course, data doesn't make any difference, does it? But it underpins all the decisions that you make, which hopefully will. So, okay, is there anything that you thought we might talk about that we haven't covered in the last few minutes? Or anything there that we've missed?
I don't think so. It was only I guess the US policy piece that I wasn't sure.
Oh yeah,
come out. So I interjected that part, but there wasn't anything else in particular.
I like the analogy of the nightclub. I mean, it does make sense. It is so loud, isn't it? It is kind of so overwhelming that you think, oh, well, that's it. We're doomed. Nobody's going to do anything. And then actually you find out people are still actually doing stuff quite in the background.
Exactly that.
Yeah. Well, that has been an absolutely fascinating sort of foray into the world of asset management and all that kind of stuff, and apprenticeships, which I'm wholeheartedly supportive of.
Absolutely.
Mark, thank you so much for coming along, sharing your expertise and experience, and maybe we'll do it again sometime. Thanks very much.
Sounds great. Good to talk. Thanks, Kev. Take care.
Thanks for listening to Carbon Clarity. If you enjoyed the show, I'd really appreciate it if you hit the like button, share it with your network, and subscribe to make sure you never miss another episode. Catch you next time.